All right, traders, recording's underway. Happy Monday. Welcome to the Weekly Outlook. Let's talk about all things stocks, forex, cryptos. This is Chris Pulver. Let's take a look at everything this morning, reading up on some morning brew, reading up on some Robinhood snacks. And there is a lot of stuff to discuss today. Pretty excellent last couple of weeks for us, trading-wise. Myself included. Just closed out for some profit again this morning on New Zealand CAD, another leg of the Aussie dollar, another leg of the Aussie CAD. So we'll take a look at some forex pairs that are moving really nicely. Look for some pullbacks this week, perhaps. We continue to see the Swiss franc very, very weak. So let's see here. Good morning, Chris. Good morning, Edward. Good morning, Philip. What's happening, everybody? Okay, we're going to go into some charts and setups. So understand this risk in trading, please, and always use trade capital only. Do not trade with money you cannot afford to lose. Everything I'm talking about between stocks, forex, cryptos, any type of setup is all hypothetical and for educational purposes only. If you're following me out there on social media, best place to reach me is leave a comment on the video. Videos like this, youtube.com/Chris Pulver. Watch videos, watch my Keep It Seriously Simple video series. I'll actually have another video dropping today. It's going to be lesson 14 of my Keep It Seriously Simple video series, and lesson 14 is going to be about Fibonacci and Gann levels and how to use them, some simple ways to find them, how to plot those swing lows and swing highs, and look for those desirable areas to sell high, buy low, good risk reward management, and then also sprinkle in Gann retracements. They work together. They're two really sound philosophies that have been used in the markets for many, many years. So hope that's a good lesson for everybody. It's about 30 minutes, but had some fun with that one. And then also, I will be kicking off my Trading Indicators A to Z series. That's going to be a new playlist on my YouTube channel, and my first one is going to be the alligator. So I think between alligator, next up should be awesome oscillator, so you start to see those videos also coming into a new playlist. All right, David B, David M, Dave, Donna. Nice to see everybody. Good morning, Trish. Nice to see you. Daniel, good morning. Charlotte, good morning. Okay, let me go ahead and get into the charts. Let's take a look at everything. I wanted to start off with the 10-year note. This has been on, I think, everybody's mind. We had the Nasdaq last week into some correction territory. The Nasdaq from the highs to last week's lows ended up crossing over that 10% threshold. So we did see a really exciting bounce back from the S&P 500, the Dow Jones. The Nasdaq did fight back a little bit, but we are looking at this 10-year note is shaking things up. Fed Chair Jerome Powell could not really reassure the markets last week. The 10-year note, why is it important? This is what's starting to cause some concern, at least in the near term. This is what's starting to allow stocks to slide into some correction territory. A 10% plus correction in any major index is considered a correction. Okay, anything that's over 20% is considered a bear market. So the Nasdaq last week, if you go to the QQQ, this is the ETF that follows the Nasdaq. We are looking at a daily chart, and from the high back in mid-February into the lows of last week, we have seen that the tech sector has been weighed down a lot. And just to put this in perspective, okay, understand that last year it was because of tech, primarily because of tech, and all the heavy concentration in very few stocks that the tech sector was leading the way. And so let's think about this. Big tech influences the entire market. This is coming directly out of my Robinhood Snacks newsletter this morning. Big tech influences the entire market, which is reflected by the S&P 500 index. On February 12th, Apple, Microsoft, Amazon, Tesla, and Facebook made up over 21% of the S&P 500's value. That is not that long ago. Okay, we're talking about 2 to 3 weeks ago. 21%, 1/5 of the entire market cap was made up with 1, 2, 3, 4, 5. Right? 5 stocks. That's crazy. The amount of concentration that is in so few stocks. That is why, as we're seeing tech slide, that is also why the SPY was having some struggles the last couple of weeks. That is also why the Dow Jones is having some struggles. Now, look at how the market responded. Okay, do you see how we closed last week right here? Do you see how we had a very aggressive, buy the dip type material? Buy the dip type rally mentality last week. That's what I meant to say. So do I think that this is a dead cat bounce? I mean, look, I'm not convinced that we're in bear market territory. I mean, it's, if anything, it's correction territory. And if you were joining me on Friday for the weekly recap, all I'm preparing for is I'm preparing to buy my favorite stocks, I think my strongest stock portfolio. I'm trying to add more levels to it. I'm trying to buy more with cash on hand, buy more from profits from last year, and be more of a long-term investor. I think last year was a great year for short-term gains. Stocks you've been holding for a long time were incredibly rewarding. And anything that is still running a profit, I'm protecting. Anything that's been stopped out with trailing stop losses or knocked out for cash, I have that cash ready to buy great stocks. So, do I think that this is, going to fall? Not necessarily. Do I think it's going to rally like crazy? Not necessarily. I think if anything, there's a pretty good indication of what the stock market's likely going to be like. Look at the volatility index. Okay, I'm going to change the color on this drawing tool. So we have this major support at 20. We have high, lower high, lower high, lower high. Now, we might see the volatility index chop around in here for a while, right? Now, what is this going to look like day to day or week to week? If the volatility index stays in here and we have these moves from $20 to $30, $20 to $30, we're going to see a lot of bullish days in the stock market followed by bearish days. And so that could translate into something like this. Right? Do you see how if you look at something like the S&P 500, we have this low, we have this low. We could see a potential topping pattern. Okay, we could see a potential correction pattern. This low, this low. If we end up chopping around a little bit more without taking out these highs, we may see a head and shoulders pattern. We may see a corrective pattern. Okay, but as we talked about last week, look at these major highs. This is major resistance from last year. This is major support from last year. This is a major high pre-COVID in February of 2020. So if we have any correction coming in, there is still some opportunity to look to buy those dips, right? But I like a correction. I'm actually excited for a correction. I believe there should be a correction. Doesn't mean that I'm actively selling the stock market. It means that I'm looking for, stocks that I want to own to go on sale. All right. And so taking a look at stocks like Microsoft, I would love nothing more than Microsoft to slide on a tech-driven correction and have Microsoft slide into $220, ideally even into $200. Right? If Microsoft comes into $200, I am buying more of it and lots of it. That would be big level one for me. Anything that came more than that, if it was, let's say this is all setting up for a big topping pattern. Well, as soon as this topping pattern is measured and completed, anywhere in here, level one, level two. Between $200 and $150, I'm still a long-term investor on Microsoft. Okay, Google. Google is still at $2,100. There's gaps below. Do you think Google could show corrections? Of course. Where to? Am I going to buy Google right now at $2,100? Probably not. Right? So let's see if we can pull back into some reasonable resistance. Let's see if we can have some type of, this is a nice little island gap right here. Let's see if we can fall back in and fill, this island gap. Let's see if we can fall back in and fill some of these previous support levels. So could we slide below 2,000 and have Google slide into 18, 17, 1,600 yearly pivots? Sure. So I will be patient. Tesla. I think there was some interested buyers last week. Tesla dipped down into 540. I did end up getting some Tesla at 550. I have another position to buy them at 505. Limit buy at 505 on Tesla. Okay, now understand that Tesla is likely going to be volatile. Tesla might slide even lower. This entire run from, once we have the 5-to-1 split from $100 to $1,000, very near, well, $900, from $100 to $900, could we slide back into $500? Sure. Could we slide back into this structure in here between $500 and $400? Absolutely. From there, if I was an investor, if this was low to high, higher low, higher high, sure. And so Tesla becomes a logical technical level to buy. So I'm looking at $500. A lot of these great stocks have these amazing yearly pivots. Okay, watch for some of these levels. This is a really simple indicator you can use on most of your charts. And all it is taking last year's low, high, and close. So if you're not familiar with using pivots, I'm actually going to do this in my Trading Indicators A to Z video. But pivots, you're going to take the low plus the high plus the close, and you're going to take the average. So you divide that by 3, right? So as an example, let's say that I'm just going to, well, we can just kind of do it together here roughly. If I take last year, you can see how everything was repriced because of that 5-to-1 split. Tesla, we had our low of the year right around the yearly pivot at $70. We had our high of the year which was way up here. High of the year was actually going into December. So at the end of the year, Tesla was cruising up to those highs around 750. So we have a low of 70, high of 750, and let's say that we went ahead and closed at the high of the year around 750 as well. So let's do the math on that. So we have 750. Okay, you can do this with any stock, any forex pair. You just again, if it's a pivot point for the day, it's the low, high, close of the previous day. If it's the weekly, the low, high, close of the previous week. So I'm doing this based on the year. So 750 plus 750 plus 70 divided by 3 puts us around $520. Now, obviously, this is calculated already for me. The indicator sits right here around $500. So my low for the year based on my high of the year, I think that must have the high a little bit lower. Oh yeah, the high of the year is probably here around $700. So I could readjust that. So let's say it's 700 plus 700 plus 70 divided by 3. There we go. So we closed and had the high last year somewhere around $700 right on the nose, and then our low around $70. So there's your $500 yearly pivot that's already calculated for me, and that's what's on my chart. Right? So, I mean, if you want to throw out some stocks, feel free. We can take a look at a lot of these pivots. Look at something like Wayfair last year. Wayfair just went up to the moon with this e-commerce shift. Wayfair from lows of last year at $25 to highs of $350, we have a yearly pivot sitting there at $200. Would I buy Wayfair at $200? I don't know. I don't really love the company. But if it's a company that I want to own, watch for these yearly pivots. Look for this previous resistance. Look for these previous structures that happen to coincide really nicely with some yearly pivots. I would not be surprised in the stock market, especially to see these yearly pivots become major bouncing points to see if the market can sustain these support levels and still see the market grind out to higher highs. Okay. The one thing that keeps getting looked at as well is 10-year notes. We talked about that earlier at 1.59. This is heavily impacting. If you check out this website, I'm watching this very closely for housing. The 30-year mortgage rates are sitting around 3.29. You can look here to see the Treasury notes, the 10-year notes at 1.59. I'm watching these very carefully. This 10-year Treasury note will also impact the mortgage rates. So, I'm looking to close on a new house probably in September. And if the 10-year note keeps going higher, the mortgage rate 30-year is going to keep going higher. So I'm hoping that after some technical levels, and this thing has pretty much tripled in value from 0.05 back in August and the lows in March, I would like to see this, and hopefully it will, settle down. If the 10-year note settles down a little bit, settles back into the low, 1.25, 1.20, then that should allow the rates to settle back in, and hopefully that works out timing-wise for anybody that is refinancing or anybody that is also looking to purchase a new home. So it is definitely a bit of a game that we have to follow and monitor. Okay. All right, so stock-wise this week, like I said, if we keep seeing the volatility market, spike up into the $30 level, settle back down, spike up, settle back down, we're clearly dealing with some higher daily volatility. Watch the Nasdaq, all right? If the Nasdaq continues to sell the rally, which means this, as we pull back, if we see more bearishness, pull back, we see more bearishness. This is okay. I think what traders have been spoiled with is it's almost like we don't have such things as corrections any longer, right? Look at like this environment is okay. This environment is okay. These are okay, right? This is not okay. This is not okay. Like this irrational, crazy V tops and V bottoms, these extremes makes it very difficult. So I don't mind seeing some type of healthy correction, right? I like seeing something that's healthy that we can start looking at levels to buy from. And with all of the heavy concentration that was in so few stocks last year, that's why the Nasdaq is such a big gauge for how the S&P and the Dow Jones will also react. Okay? So we are seeing stocks that were completely overvalued, and that's really what the tech sector was doing last year. It was overvalued. Anything in the tech sector was making money. Any company, in fact, the amount of companies that didn't make any money. There was some Goldman Sachs index of tech companies that made $0, and they were still. It was like 70 or 80% of companies that were in the NASDAQ were like not even making money. So I could be totally off on that, but I know it was a lot. There was some Goldman Sachs index that I kept seeing on said on Twitter, and is also like Morning Brew, Robinhood, those little newsletters highlighted as well. But it's a heavy concentration in very few stocks, and so in a way that kind of makes it seem like it's House of Cards ish. even though those are major stock plays and major blue chip companies like Microsoft, like Apple, like Facebook. I mean, those are huge companies, right? Amazon, Tesla is the one that is, once it was brought into the S&P 500, Tesla was seen as it is volatile. From Tesla going to 100 to 900, that is bringing a whole new level of volatility into the U.S. markets, right? So Tesla dropping from 900 plus down into 540, that's not a bad spot, but watch that 500 level. Okay, all right. So let's take a look at some currency pairs this week and some cryptos before we wrap things up. Just full disclosure today, I'm not feeling the greatest, but I don't know. Hopefully you can't tell. I feel this is like maybe the worst of it, maybe not. I'll see if I can talk by the end of the day. Bitcoin. I was noticing that Bitcoin is back up to 51,000. Right now, we've talked about this a lot in my trading room. Let's see. Daniel says, is Biden going to give us the crash gas going higher? $15 minimum wage. Yeah, I mean, look, the reality is, inflation is for real. I mean, and it's not on everyday things, but if you want to see what inflation looks like, how about some of these things? How about lumber prices? How on earth is lumber $983? Look at the volatility we've seen in lumber the last couple of years. So we had lows in lumber, $300, $200 have skyrocketed to nearly $1,000. That is a 3 to 4, I mean, nearly a 3, well, all of a 300% increase, all of 300%, right? So a threefold increase, and then look at it go from 900 back down to sub 500, almost a 50% decline, and then we rally right back up again. I mean, this is incredible volatility on the futures market. This is incredible volatility on things like lumber, platinum, copper, right? Fortunately, we have not seen this type of volatility translate into gold and silver, but this is crazy, right? This is insane. So, I mean, again, if you're in real estate, this is a big deal. We're starting to see more and more builders that are looking for alternative means. Like instead of building a lumber-based home, looking to do something with some type of steel reinforcement. I've seen the last couple of weeks I started to read about 3D printed houses with concrete base. There's all sorts of weird stuff going on because this price is ridiculous. So anyway, watching copper, look at where copper is. Copper down to 350 just last year, March of last year, and it is 7. That's what? All of 100% gain, right? Now, does it look like it's an efficient rally? No, this has been ridiculous. Like this is all rockety and ballisticy. This would make Wall Street memes proud, right? This would make GameStop traders proud. But at some point, this rally, if this is 1, 2, 3, 4, 5, you'd think that at some point we're going to have at least a correction. And so that brings in with inflation numbers. Is it hitting the consumer? Are we going to see $15 minimum wage? I know Republicans are pushing back on that. I'm trying not to get into the politics of stuff anymore. It's been an exhausting last 4 years of politics. All I want to do is trade, focus on trading, focus on the technicals, because at the end of the day, I told this to traders last week, at the end of the day, if you focus on the technicals, 90% of your trading is taken care of. You don't have to be fundamentally influenced or emotionally involved or it's like you can have a narrative, you can have awareness, but if you trade the big picture on the charts, it tends to be a lot better than trying to, trade Jerome Powell's comments or trade, what you're reading in the news. It's like all the news does, in my opinion, is it exists to confuse everybody, because one day you read buy the dip, the next day you read sell the rally, one day it's, the bull market will never stop, the next day it's the bear market's here to stay. Every day it's something different. And so, in my opinion, that's not consistent. That's going to just confuse us as traders. And so I tend to just stick to the technicals and try to watch the charts and go with my decision making from there, right? And then it's amazing how the narrative of what you're looking at technically tends to fall in line. For the last 3 months, right? January, February, and March, the last 2.5 months, like because we're only halfway through, we're a third of the way through March. I was very long on the U.S. dollar going into this year. Okay, so I started to position myself long on the US dollar. Now, I had a lot of traders over the last couple of months. They're like, how can you justify being long in the dollar? It's at multi-year lows. It's a dead currency pair. There's stimulus and right. You're right on all those things. But I said technically there's a case for the dollar to get stronger. And what have we seen? Okay, we saw the dollar correct early in January. We saw the dollar come back onto the right side of the trend line, make a new low, and lo and behold, this low to this low established the bottom that we could buy from. And we have seen a pretty amazing recovery in the dollar, and it's not done. I think that this rally, pull back, and go, we still have another leg up on the dollar. All right. I also think that as the U.S. is showing better signs of recovery, the economy showing better signs of recovery, there will be more inflows into the U.S. stock markets. There will be more inflows into the U.S. And if there's going to have to be some type of discussion with tightening, even though the Fed is trying to say they're going to keep interest rates very low until 2023, that 10-year note is going to be something that has to be watched very carefully because if that keeps ticking higher, there's going to have to be some type of jawboning or intervention by the Fed because otherwise inflation will be taking off and it will scare the stock markets a lot. And I think right now, I think most investors out there would rather see a stronger stock market for the sake of wealth management versus a stronger dollar. Stronger dollar, sure, that helps purchasing power, but that also hurts that hurts our trading, that hurts our trade deficit. Having a weaker dollar is better for stimulus, and we've seen that with countries around the world for the last 10 years. So anyway, there was a technical case for it, and I don't know what you would justify as a reason why the dollar is getting stronger, other than the fact that we've essentially priced in dollar weakness. We've priced in inflation, right? In a way, we've priced in inflation. In a way, we've priced in the $1.9 trillion stimulus that was voted on with Kamala Harris as the tiebreaker vote, 51 to 50. Like it passed on party lines. So are we gonna get the $15 minimum wage? I don't know. Maybe, but that's a lot of work for Democrats. So like I said, I'm trying to take the politics out of it and just trade the charts. So I think there's still legs to the upside on the dollar index. I'm looking to stay with this. If the dollar goes, let's say we have a pullback week and the dollar still maintains this trajectory overall. We hit this level, we hit this level. This is where I'm profitable on the dollar. Okay, this is where I'm closing my dollar trades. This, to me, is where I believe that the dollar is done what it needs to do from the technical sense to be good. Right now, that means that I could still be short on the Aussie dollar. I could still be short on the euro dollar. I could still be short on the pound dollar. I could still be short on the New Zealand dollar. I could still be long dollar CAD, long dollar Swiss, and long dollar yen. Right? And we have been tracking these currency pairs very closely. And in oil, we hit $65 and change. Take a look at this oil chart. I am definitely ready for the technical side of oil to start to cooperate. Watch this high right here. I've been watching this $65 high very closely. Now take a look at my little subgraphs. Okay, take a look at this right here at the bottom. This is overbought. This is divergence, meaning that price made new highs, okay, but momentum did not. Price made new highs, but we're showing bearish divergence on both momentum and overbought conditions. So my relative strength is looking for a sign to sell. My divergence is looking for a pattern up here to start selling. So these are early indicators. These are what I use for kind of anticipating tops and bottoms, getting ready for price action to support my thoughts technically. Right now, where do I think oil is going to drop to? All I'm looking for is a correction. I would like to see oil just, hold these highs at 65, work its way back down into the low 50s. I think the oil can establish a supply and demand range in here where everybody's happy. Countries are happy, okay? Oil manufacturers are happy. There's profits to be made. As far as employment goes, there's cyclical ways to bring employees in, manipulate the rig counts a little bit. Oil inventories fluctuate, but we have from going into negative dollars and cents last year into this straight on recovery. Again, it's running a little bit hot. It's a little bit overheated. So again, is this a sign of inflation stuff? Maybe. But from a technical standpoint, should oil settle down a little bit? Sure. We had almost a 2-year range right here. Okay, about a 1.5-year range right here. If we establish the same thing, we could have some ranges in here. My concern is that if oil keeps running hot like this, that it does the same thing it did back in 2018, which was it rallied to a point of no return. Right? And we saw some major collapsing in oil. So if it does run into the 70, 75, 80, I'll tell you when everyone's going to complain. At least in the US, everyone's going to complain when it's $3 a gallon, right? And most of the other world doesn't even know what a gallon is because they're all in liters, right? But any US driver that's paying $3 a gallon for gas is going to hate it. I don't care if you're working from home. It still sucks. So at some point it's like, how can we justify oil being this high when the demand is not going to be there? Like they want to see weaker oil. OPEC continues to talk about production cuts and they're trying to keep oil prices sustained and stable. But I think we're going to have some stable ranges between like the $50 and $65 area. Again, there's no signs of the drop yet, but watch this recent low. Okay, watch this recent low. If we take out this recent low and we slide into this level, we're looking for a correction on the right side of the trend line to come back into, that's too low. I think we could correct back into $51. Okay, so from 65, look for something this week on the daily or weekly candle. Look and see if we break these lows back below 60. If so, we slide back down to 52. Okay, now what could be a great trade because of this? If oil cooperates the way I'm talking about here, then a currency pair that I'd be looking to trade is the dollar CAD. Okay, and we have talked about this a lot in my trading room. This is the one pair that even though I see the dollar continuing, oil has been stable, and this low, all these levels, I'm looking for the dollar CAD to get that push. Dollar CAD has to push up into 1.30, possibly into 1.3350. There's also that yearly pivot we talked about, 3390, 3400. So there's great technical levels for dollar strength, but in order to get this trade to really cooperate, we need to see dollar CAD go to the upside with some confirmation. We need to see oil probably help that move along. Okay. All right, let's see here. Drover's saying OPEC's expected to make a decision on oil cuts this week. I think they're going to add 500,000 barrels. Yeah, I mean, I know that they've been anti inventory, right? Like they want to keep cuts, they want to keep holding cuts. Kevin says $3 for gas in California would be a 6-month low. Well, let's actually, what is the national average right now? U.S. national average in gas. U.S. national average gas price. I'm curious what it is right now. Which state has the most gas prices? What percentage natural gas? What's the average price per kilowatt? Natural gas. I don't want natural gas. I want gas per gallon. Natural gas price per gallon. Gasoline price marched towards $3 a gallon. Average prices in Houston rose another 6 cents to $2.42. I mean, I'm here in Michigan. It's like we're staring almost everything around 275 to 280 a gallon. Here's your average right here. That's what I'm looking for. And like I said, I mean, is this the reason? It's like, look at this. I mean, some of these states, I mean, look, Texas is a huge energy producer. So 250. Like if Texas gets over $3, I mean, you're talking about, everywhere else is going to be well over $3. California, let's take a look at California. Okay, California, $3.75. Oof, that stings. I mean, again, what are consumers going to do? They're going to stop buying gas vehicles. They're going to buy hybrids. They're going to look at electric vehicles, something, right? So just stuff. I mean, national average today is $2.77 as of today, March 8th. So it's, this is our lowest prices in the Southeast. I guess 270 to around 270 is all the white states. Red is pretty expensive. $3, 290 to 375. Ugh, man, the West has it rough. Illinois, what's up, Illinois? City driving, terrible miles per gallon. Anyway, it's something we have to watch. And if oil drops, again, technically I think oil is due for a drop, which will hopefully help, the levels at the pump. But I think the dollar CAD is a beneficiary of that move. So if oil slides, dollar CAD is a great trade. Okay, last couple of weeks, we've had some great profits. We may not have held onto these things forever, but we held this dollar Swiss beautifully. We held this into the highs around 9,300. We hit our pocket at 9,350. Hats off to everyone that took this trade. I know it was a long time. We held onto this for several months, but we got paid really handsomely on the dollar Swiss. Okay, same thing on the euro Swiss. So these were a long time coming. Like this was another trade we waited for 6, 7, 8 months, but it paid us out beautifully. CAD Swiss, waited on this trade for a while. The Swiss franc, even though it was a dormant currency pair for quite a while, it did what we wanted it to do, right? So it came back into these pockets and paid us nicely. So we sat in this trade for a long time. This was, summer of last year, sat on it through the year, and we had this nice explosive move. Am I gonna start shorting this pair right now? Not really. And I told this to my traders last week in the Flex trading room. If the Swiss franc is interested in staying weak, look, the dollar Swiss could be a currency pair that from this low to this high, if we have any pullback on the dollar Swiss, guess what? I'm still buying this thing. So this is a swing, a correction. I want to buy this dollar Swiss more. I think there's more room on dollar Swiss. right? I think that we are basically establishing a major low on this dollar Swiss. And I think that there is something very intentional going on by the Swiss National Bank. I think that they are using Swiss denomination to fund and fuel this risk appetite that's elsewhere in the world. Okay? So point is, I think dollar Swiss is here to stay. I think that we have to get some pullback levels. I mean, we essentially rallied from 8,900 to 93 and change, very aggressively. If we pull back, I'd love to buy some dips and see this thing continue to rally. Okay, one other currency pair I'm going to talk about, and we've been going for about 30 minutes today. I don't want to go too much longer. Euro CAD. This is another one that I've been watching really carefully. Traders with me in the flex room, we've talked about this level being potential support. We broke through that. Now, I do have a potential buy trade. I'm going to drag this chart over here. This is one of my accounts for the uh, FOREX market. And Euro CAD, you can see I have a buy trade right here. Let me click on this. So a pending buy at 4890. Okay, now, I am tempted to get into this trade now at 5043. If you can see on my chart, I do have I'm looking at a really conservative level on a retracement back up towards like 150 pips. What I may consider doing is, let me take a look at some other indicators here. Big picture, here's what I'm thinking big picture. If this EuroCAD can fall back into, let's say, this past resistance, let's say we can finally fulfill this pocket from 2020. If this thing will slide a little bit lower between 4,800 and 4,600, I'm going to buy this EuroCAD back up into this 152 level. Okay? Now, this could become a much bigger trade than that. We may see this EuroCAD go from this area, possibly this area, all the way back up into these highs at 1.60. So this could be just a big trade. This could be a big range opportunity where maybe this low that is broken just recently, maybe this is the bear's way of testing the low and the bulls step in this week and start pushing this back up into range levels. So if the EuroCAD is going to start showing some signs of bullishness, I would imagine that the CAD Swiss should show some signs of bearishness. Now keep in mind that EuroCAD is pretty volatile. If you want a fairly safe trade against oil, trade the dollar CAD. I think if oil behaves the way that we're looking at technically, the dollar CAD should be a really nice trade to the upside. Okay, EuroCAD is going to be a bit more volatile, but I love this currency pair. At the end of the day, I like this currency pair for what it offers with efficiencies and volatilities and pivots. And so if I zoom in, let's go to the 4-hour chart here on the dollar CAD. Take a look. So I have just recently, we have a weekly target. We have a couple of daily targets as well. If this continues to stretch any further, then I am extremely interested in buying this thing. So we might pull back into this area here today or the next couple of days. We might find this weekly pivot around 51.50. If I don't get the trade like right now, then I'm going to miss it. Okay, but on the weekly chart, there's a really nice pocket here. Okay, this candle from last week was so inefficient that I would love to see oil drop and the EuroCAD can spike back up to around 52.08. So I'll set a chart alarm here. I'll go 52.05 and say that this is a weekly pocket filled. Okay, and so I am looking for, ideally we see oil. If it's going to stay, or maybe even the EuroCAD just slides a little bit lower, I'd love to pick up some oil right around that 48.90 level. If it slides a little bit lower, then look for the buy trade. If it slides into this area, this is where I'm going to start building buy trades to take it back up. So the trade is a little bit premature. I'm not going to jump into it yet. I want to see if it can come down to me. So I'm setting levels. This is a level I want to buy it. This is a level that I want to buy it. Level 1, level 2, I will take it back to this chart alarm. So if I build this at 48, build it at 44, that gives me break even around 46. I head back up to 52. That's 600 pips of net profit on the two positions. I can certainly add more to that and make this a much bigger win. Okay, so we're off to a pretty good start. Let me find my little flex doc here. So anybody that's in my trading room, we're off to a pretty good start for the year. We've had, granted we carried over some trades from last year. Some big ones like Euro Swiss and the dollar Swiss, but we closed up some good profit on New Zealand CAD. We've closed up some profits recently on, Euro Aussie. We're back in. We've reloaded some trades, but that's a pretty good way to start the year. Not even 3 months in, not even through Q1, we're up, over 12,000 pips. So I'm pretty happy with that in the Forex market. If we do that for quarters 2, 3, and 4, or we can stay on that type of pace, let's just say 10 grand, 10 grand, 10,000 pips a quarter. We're looking at 40,000 pips for the year. That's plenty of progress on a Forex account. So we're doing some pretty good damage there. Okay. All right, let's take a look at a couple more things. Let's go into cryptos. Bitcoin, like I said, we're at 50,000. There's going to be some volatility on cryptos. My outlook on Bitcoin and others is that we established a higher high. We had this all created with divergence, which means that price and momentum did not agree. So if I show you my indicators at the bottom, we have higher highs in price. Okay, we have lower highs in strength. We have overbought conditions. I think that this is going to have to show signs of a correction. Now, I could be wrong. There could be more of this, run, and it crashes even harder at a later point. But I think right now with this high and this high, there's probably a lot of people that started to buy. When Elon Musk tweeted and it went from 30,000 to 50,000, everyone's like, oh man, I'm going to jump in and start buying Bitcoin. Well, I wouldn't be surprised if those traders get shaken out a little bit and we start falling back into this area. We might end up having a bigger correction. We might go from 10,000 to 50,000, nearly 60,000. You have to remember in 2018's high to 2019's low, there was an 85% correction. So we might do the same thing all over again. We might have this rally right here, correct 85% of that, and then have to sit and wait for another big, gigantic rally later on. But if you're ready for that, if you're willing to be an investor on that, then that's the game. If I am wrong on that and all this is a little correction in here, and it shows some really good behavior of a corrective move, then we start looking for levels like 30,000 or 20,000 to be a reason to buy Bitcoin again and see if Bitcoin will lead the way for other cryptos to follow. So I'm watching cryptos very closely. Bitcoin is a major. Ethereum is a major. Ethereum's back up towards 1732 with highs at almost 2100. Again, really overbought conditions. Another thing that's a little bit alarming is the weekly chart. Okay, the weekly chart, way overbought, right? So, could we go higher? Sure. But with overbought conditions on high time frames like the daily, like the weekly, I wouldn't be surprised to see some corrective phases coming in a lot of these cryptos. And so this could be this. We had a high, we had a low, we could have it's a retracement essentially. But this structure could be more bearish. We have a high or a lower high form, and then we see Ethereum drift down into corrective territory. Again, I would like to see Ethereum back into $1,000 or $600. This is a window for me to buy. I'm looking to buy more Ethereum in this window if I have the chance. Okay, otherwise, I'm going to sit on my break even around $250 to $300 and see how long I can hold this. But if I want to add more, I'm not adding more at the top. Okay, this was my main position. I'm looking to add more on some type of corrective move. And that's the same across the board. If Bitcoin's going to show corrective signs, if Ethereum's going to show corrective signs, if Litecoin's going to show corrective signs, same thing. So could we have high, low, lower high to lower low? Sure. So Litecoin, right around $100. I would buy Litecoin sub 100. The mining costs on Litecoin are right around $160. Okay, so watch those levels carefully. We shouldn't see mining costs. We shouldn't see price. Price shouldn't really dip below mining costs too frequently without getting some major support. So that's one to keep an eye on. Ripple, through all of its drama with the SEC, 47 cents. We have a range right now on Ripple between 20 cents and 70 cents. So there's some stability here right around this 40 to 50 cents, but it struggled to take out the highs at 75. We maybe revisit the lows at 25. But not super exciting there. Other cryptos have done pretty well. Link US dollar getting some love, but again, we could have this high to low, lower high, lower low. So if you ask me right now, I think cryptos will be in more of a corrective phase. One thing to get ready for, we'll start talking about this more and more in the coming weeks. But this is a phrase that I've said for many years: pre-summer push. Okay, so mid-March to April to May, expect trends, expect higher volatility, expect extremes. Okay. If you are more mentally prepared for this type of behavior, you won't get in the market as early. Meaning this, it's like, oh, it's overbought. Okay, great. But rather than jumping in and saying it's got to go down, instead, it's like, why don't you just wait for the overbought to get so ridiculously extreme that you just wait for a sell trade on confirmation? Or you actually start participating when the moves are bullish, look for flags to stay bullish and stay with these trends and stay with these pushes. So this is a good time when we start to see more trends stand out, more trends. And again, I mean, this is what I tend to see this, every middle March of April. It doesn't always go the same direction. I've seen April push prices to highs and May push prices to lows, or vice versa. But what we expect to see is a lot more volatility and a lot more trend-friendly behavior. So if we're staying with trend-based systems, if we're following trend-based indicators, I think that's a good thing to stay, active over the next couple of months. And hopefully we'll see day-to-day trading ranges pick up in the forex market. We'll also see some better movements and more confirmations coming in stocks. All right. So if I'm going to go ahead and summarize today, we've been going long for about 40 minutes or so. I don't want to go too much longer. Again, stocks. Let me just do a little stock summary. Okay. So summary for today. Stocks. Look to buy great companies on sale. Okay. Look to buy discounts at great technical levels. If stocks that have been overstretched and overbought and extreme, and they're finally starting to come back down to levels that you're interested in buying, that's what I'm looking for. The patience is finally starting to play out. The patience is starting to hopefully offer us chances to put some cash back into the markets, invest at levels we're happy with. And is it going to be, are we buying bottoms necessarily? No. I mean, we could see a lot of this, the melt up that's continued since March of last year, this melt up for, nearly an entire year. That melt up could evaporate. We could see, maybe a 20 to 30% correction, maybe a 50 to 60% correction. We don't know. If we had the crystal ball, we'd tell you exactly what to do. I know exactly what to do, but we don't. So I do think that there is still a lot of money out there. There are literally trillions of dollars circulating in these markets that are looking for yield, right? So where is it looking for yield? Equities. You put money in a bank, it's 0%, right? You put money in bonds, it's still crashing. Bonds are offering nothing right now. Bonds are offering safe haven, but they're going down. So the market is looking for yields. The market's looking for investment opportunities. It is in equities. So coming back into corrective territories, like I said, it's high concentration in a very small amount of stocks. It was led by the tech sector last year. It was led by the Nasdaq. So now we start to see that tech is sliding, is dragging everything with it. That is totally fine. 10% is considered a correction. Okay, 20% is considered a bear market. Now, watch those key levels. Like last week, the Nasdaq was in a 12% pullback level. So it's not a surprise that the market jumped in and pushed the tech sector higher. The Qs finished on, it still lost for the week, but it had a big recovery towards the end of the week. The SPY and the Dow Jones also saw some jumps at the end of the week, right? So in fact, last week, the Dow Jones finished just shy of 2% positive. The S&P was just shy of 1% positive. The Nasdaq finished the week negative, but after a big rally. Okay, all right, so stocks look to buy companies on sale, look to buy discounts at great technical levels. Let's go Forex. Okay, dollar still looks strong in the next 1 to 3 months. Okay, now again, everyone asks this, like, what about stimulus? What about the if we have more stimulus rolled out? If we have the Fed raising rates, not raising rates, what if they whatever? If it's all news-driven stuff, I'm not interested. Technically, the dollar should keep recovering. All right, now this dollar strength is a correction against the last 5 to 6 months of bearishness. There's a reason that the dollar's been weak. All right. So was it pricing in inflation? Was it pricing in, the recovery for the U.S. economy? Was it pricing in more stimulus and stimulus packages? All these things were getting priced in well ahead of time. Now that they're here, this was the buy the rumor, sell the news. So again, I think the dollar's getting stronger. Stocks are selling off a little bit. It makes sense. Okay, watch the TNX or 10-year yield. If that continues to tick higher, the dollar will tick higher. If that settles back down, the dollar might resettle and the stock market can rally a little bit. All right, pairs that I like, Forex, because of oil, U.S. oil may impact dollar CAD, Euro CAD. Great setups that I like for long. I like for buy opportunities. I like dollar CAD long. I like Euro CAD long a lot. Okay, cryptos. Correction movements likely. Okay, Bitcoin. Bitcoin between 30 and 20K. Okay, 20K are buy areas. Ethereum. If we come back into 1,000, okay, so 1K to let's say $600, buy area. Litecoin. If Litecoin comes into anything $100 or less, buy area. Right? So corrections are likely playing out on cryptos. So again, I mean, and if you find yourself, if you bought Bitcoin at $50,000, don't be mad. It's okay. But hopefully it wasn't a big position. It's a partial position. Look to get back in if it corrects back to 30, if it corrects back to 25, 20. Look to get back in on a nice simple trendline break. Doesn't have to be complicated. If eventually Bitcoin by the end of the year hits 75,000 or 100,000, guess what? You're happy that you're in now at 50, right? You're happy that you're back in if it pulls back to 30,000. You're super happy. Are there other coins out there? Of course. Right now I'm in I think I'm in 8 coins. 8 coins for sure, maybe 9. I'll have to double check. But I know I'm in 8 coins. And so they're not going to all move according to Bitcoin, but for the most part, if Bitcoin is up and Ethereum is up or Litecoin is up, the other cryptos and the altcoins tend to move with it. Okay. All right, Bill, that's awesome. Bill says, finally started to trade smarter with patience like you. Finally in the positive. Good, Bill. Keep up the good work, man. The most important thing is stay around the sessions, right? Stay around the sessions. Look and see how we're planning our trades out, and patience is always a big deal in trading. All right, traders, I'm going to wrap it up here. It's been just shy of 50 minutes. Any questions for me today? A couple things to look for to wrap up for today. Let me delete this for a second, go into my little Outlook. So I'm going to have a couple of things. One is I have a video coming today. I just have to get it officially published on the YouTube channel. But look for Fibonacci levels and Gann levels. This is lesson number 14 in my Keep It Seriously Simple video series. And I'm also going to be plugging in video 1 of my Trading Indicators playlist. So a couple more things. Just again, if you're subscribed to my YouTube channel, perfect. Subscribe to the YouTube channel. Click that notification bell. When this video goes live on the channel, you can get the notification for it. Otherwise, check it out. Just keep an eye out for that Keep It Seriously Simple video series because it's coming today. I will probably premiere that as well. And if I'm in the premiere, that I can actually be chatting with everyone live as the video hits the channel. Okay. So for today, if you would give me a thumbs up, if you liked the session today, enjoyed it, or watching the recording, the thumbs up helps me do this. Look, I don't need the gratification of like, oh, you like me, you really like me. But instead, for the YouTube algorithm, if you smash that like button, if you hit that thumbs up button, what it does is this video, with the amount of attendees and the comments and the thumbs up, like the percentage of likes for the attendance, it pushes me up in the YouTube algorithm where this video can be seen by lots of people. And that's what I want, because I feel like free trading education, good trading education, I've been doing this for a long time. I'm here to help. Right? I'm here to make everyone's learning journey faster. And traders that are with me, every single day in the Flex Room, or just getting free education from me, I hope this helps. And if you have any questions, let me know. I'm all ears. And we're in the same boat together. We're all trying to make good trades. There's never a better time to be a trader investor than right now. So anything helps, right? So I'll keep the good content coming. You can join me again live on Friday for a weekly recap. If you're with me in my Flex Trading Room this week, I'll see you tomorrow. If you're with me for other classes like Price Action Pro, we have a class today at 4 o'clock, and we have some stuff to talk about as well. Okay. All right. Philip wants to look at gold really quickly. All right, we'll take a quick look at gold and silver. I actually did not look at gold and silver earlier, so let's do gold and silver really quickly before we go. So gold is at 1689. Here are my thoughts on gold. If you are buying gold at $1,700, small, okay, If gold continues to stay, look what I have. This is an entire rally on gold. Okay, so where do I think gold goes? Well, remember, we're at new historical highs with that 21, just shy of 2100 level. So could gold end up showing us corrective behavior all the way down for a while? Maybe a little bit longer. But if you take a look at this support, this support, this support, and we came back down to this channel low, guess what? Gold looks like a pretty inviting spot to buy here. Level 1. If it gets back down into these March lows, that to me is level 2, which is around $1,500. Okay, and level 3 would be back into $1,365 or $1,300. Level 2, level 3. If I'm an investor in gold, I am investing at these areas. Because do I think that gold could get back to $2,100? I do. Do I think gold could have new highs eventually, with especially as an inflation measure, especially as a hedge against inflation, and a safe haven versus the stock market if we start to see more slides and corrections? Yes. So again, I can't promise the low here at $1,700. But I think technically that's a great spot. Given this rally here, this is a nice pullback zone. It's also channel support. So I like 17, but it's not my only position. Buying at 17 means that's one spot. Buying back over here around 14, that's one spot. Buying back over here, that's one spot. But long term, I'm long on gold. Okay, silver. Highs around 29. Okay, highs around 29, lows around 22. I want silver to come back down into 22 to buy. If it comes back into 16 or 17, it's going to be a buy. So trade 1, trade 2, trade 3. I'm a long-term investor on silver. So could we go from $22 to $29? Sure. And that's not a bad move. If you get a $7 move, okay, you're looking at a 32% gain. That's not bad. Again, I don't know what position size everyone's using here, but if it's a position here for 30%, and you can take the cash, and you can do it again, 30%, take the cash, do it again, 30%, take the cash. Eventually, if we break out and go higher, we could take, I think that silver can get to $50. I really do. So if I'm buying silver at 22, I'm looking at 100% upside to get to $45, $47, $48. But $50 is a nice round number to it, and that's where I'd be looking to take it. So I'm still long on gold and silver. I think they're both coming to great areas. Gold right now is probably a better opportunity just because of where it sits in the channel. But silver, right, anything $22 I like a lot. Okay. All right, traders. On that note, I'm going to go and wrap it up for today. I'll stop the recording here, and I'll see you all again on Friday for a weekly recap. I'll see you in the Flex Room this week. Make sure you give me a thumbs up and like the video. Look for the lesson 14 coming today. Fibonacci's and gamma retracement levels. Nice, easy way to plot those swings, use support resistance, and see what the market does over and over and over again. All right, traders, have a good week. Looking forward to making some trades with everybody, and I'll see you all again on Friday. All right, take care. Bye-bye.